Hi, folks. This is Lee Gettess with the Market Sense for the week of January 29th, 2013. The charts I use come from the Trade Navigator software that I really wouldn't know how to do business without. And the first chart is a weekly bond market, and the bonds are starting to break down, or at least appear to be. They've held the resistance that is absolutely the lowest possible resistance they could hold. That resistance actually calculates at 144.12 and the high is 144.11 so far. And they're down about into the support, which is about 143.04. Now, I'd give that a little fudge factor because I could see them making a marginal new low below this swing low and then holding, but I think they could break down to the lower Keltner band here at around 141.20 without too much trouble. This is such a huge sideways pattern going back 7, 8 months here, and breaking down out of this should be really, really ugly. I mean, they should go down for about 7 or 8 months. But I must say we have this one caveat. Despite this technical setup, we're dealing with a market that the Fed is buying some $40 billion worth a month. They come in and buy at the right time and they could snap this baby right back around. So that's kind of the battle we have here. A very ugly looking technical picture, but one strange, very unusual fundamental factor. I mean, name another market where somebody might buy $40 billion worth. So tough market to analyze, but purely on a technical standpoint, this looks like it could be a really nasty breakdown here. Now in stocks, it looks every bit as positive as bonds look negative. They just go up without a conscience, and that's actually a bit of a problem. Just a quick aside, after the close on Tuesday, Amazon, which is a pretty big company, announced very disappointing earnings. And so what did the futures do? Well, they went to new highs because that's what they do on everything right now. And that can't last forever, but they can remain irrational a lot longer than you think, and certainly a lot longer than I can remain solvent. What they are right up into the resistance up there at 1505. I have no reason to believe that'll stop them, though, honestly. The support that they should be driving off of is down in the 1482 area. They haven't come even close to that. And they've got more support at 1474, and they really wouldn't be showing any weakness at all until they get below 1460. And, again, they're up in the 1505 area. They're just showing no signs of slowing down at all. So very difficult to determine where this might end, but the market without a conscience, the market that goes up for any given reason, good news, bad news, whatever, that tends to end in a very abrupt and ugly fashion at some point. But hey, they could be 1550 or more before we see anything that even looks like a top. Right now, I'm looking for reasons to believe we have a top, and I just don't see any quite yet. But we'll keep looking. So that's what we've got for you today. Hope you can find something profitable to get yourself into. Thanks for checking in to see how we're looking at things.